Major week for Palantir releasing earnings, but a lot of other news and surprises from the company themselves, with one critical to their potential future growth of onboarding customers and trying to reach hyperscale. So, looking at the stock first, everyone knows about their run up Monday throughout the day before earnings, but gave up all those gains and then some when closing out the week around the 20s. I mean, in the short term, yeah, it seems like a lot, but long term wise, this is a typical volatility move that we'll see for the stock that is very sensitive to their perceived growth rate for the future, as well as the multiples and premium that is willing to be paid by the market. So basically, more volatility ahead regardless. Now, right after earnings, we started with a slew of analysts and their changes in opinion on the stock or even keeping it the same. Well, the bull stayed on as expected as buyers. Bank of America's Mariana at 28 and Wedbush's Dan Ives at 35, as well as an unexpected turn like the mega bear of Rishi from RBC, who actually raised this price target from $5 to $9. Still, though, remember he has an underperformed rating and many more. But the overall theme was pretty consistent from the non-bulls at least, that Palantir put up some okay numbers of growth, and maybe it's early signs here, with a few mixed on boot camps besides Rishi saying it's never going to work basically. But essentially, it's the wait and see mode for them, and not necessarily seeing Palantir as an exponential grower yet. For me personally, analysts just supplement my research and take everything they say with a grain of salt. But you know what? They do get access sometimes to info that other folks can't get easily themselves, so that's always nice. Then we've got Cathie Wood, a little busier this week, deciding to pick up Palantir shares after earnings. She added shares to 4 of her funds with a total amount around 1.3 million shares. Now, it's definitely bigger buys than the recent smaller ones we've seen lately, so maybe she saw something in the earnings or just saw the price drop as an opportunity and attractive to pick up more shares. Then we've got some insider selling. Peter Thiel, the co-founder and chairman of Palantir, selling 6.3 million shares one day, and then on the following day also sold an additional 1.67 million shares, as well as another 5 million shares right before the weekend. Now, from the comments on my video there covering this, we seem to have a lot of debate in the comments from those who care or don't care about his selling, so give your best reasons down below if this signifies actually something from Peter Thiel, like he thinks they're over or fairly valued, or maybe something completely personal, wanting to diversify and get cash, or even something else. And all while this was happening too after earnings, Palantir and the management team was out in DC for the AI Expo hosted by SCSP. They were a top sponsor, and Palantir has Karp speaking, of course, on his typical philosophy, opinions, and politics. And do note this is a government-focused event, so the conversation did steer towards the Israel-Hamas conflict, and his comments on the student protests within the possible long-term effects of the systems and symptoms, but also more crucially, in my opinion, are two things. First, which is something every Palantir investor should know about or at least have heard about and keep their eyes peeled for on its progress, Shyam revealed the AIP Builders QR code, which gave access to $500 of free compute for 1 month for the first 400 people to sign up. Note, this is only available to individual and commercial entities for the United States and United Kingdom. So when you sign up there will be some requirements for your email, phone, identification, as well as a selfie photo, as well as the credit card number, of course, to pay. Now, as an investor, this is the first signs of trying to at least corral in those end user developers without them needing to be part of a large enterprise that signs up with Palantir. So hopefully this approach from the other end can attract small businesses, potential startup founders, and even just developers who may scale up their usage over time and actually become major customers, who knows, but we'll just have to see. And then the second cool thing to come out of the AI Expo is Hyundai and Palantir's partnership on the unmanned sea vehicles that they're developing. We saw an announcement a while back, and they had a physical model actually at the event. But they also released this trailer detailing the vessel itself, how it can be controlled with mixed reality, and it will have the ability to work in droves and like a swarm. So of course this will be powered by Palantir software and will utilize AI, especially for the management end of multiple vehicles at once. But business-wise, this is a nice jump to see the progress that they've gotten in for prototyping and visualizing and how this will actually be made. And the added gravy on top too is that this appears to be an end-to-end kind of agreement where Palantir will also help in managing the scaled-up manufacturing of these vehicles. So hopefully more to come, since I know the focus of the early part of the deal is still for reconnaissance, but eventually they will get to weaponized versions of this. Now, you got to save the best for last, earnings, which I've gone through the summary video here in the past if you haven't checked it out. But for the weekly video, I'll just do a quick run through of the major highlights for me. Now, under the radar-ish first was that they bought back 400,000 shares. I knew this happened actually right at earnings because it was mentioned in the earnings call as a quick one or two liner. And note, these are not guaranteed to continue, of course, and it's definitely just a tiny drop in the bucket since they're a $40+ billion company right now where they're trading. But interestingly, they bought these shares around the $24 mark from the market. So if anyone were to see a bright side to it, it's just more symbolic, in my opinion, of the company just wanting to maybe get the ball rolling or show some good faith to investors that they would use some of the $1 billion they set aside if the time comes to it. And I'd say it's not a large enough purchase for them to signify they actually believe the company is undervalued or fairly valued to buy their shares back at $24. But still, it's something. I'd still prefer personally for them not to buy back shares here and continue to invest in scaling up in their business and growing their top line first. But the other big highlights from earnings was GAAP net income and operational income still expanding and then still qualifying for S&P eligibility, of course, with those. And then their customer count continued to grow, especially on the commercial side in the US. Not necessarily a home run, of course, but it's running higher than their average customer run rate when they add each of the past quarters. And then the big unexpected revenue beat overall at 21% year-over-year growth, which was actually driven by better than expected government growth and a higher net dollar retention, meaning that existing customers are expanding their usage, noted by management, driven by AIP. Because if you want effective AI, Palantir has the tools like Foundry, their Ontology, Apollo, supercharging the value you can get from AIP when you use this in tandem. And then guidance-wise, guidance actually came out on top end for Q2 and it's projected for 22.5% growth. And from what we've seen from Palantir, they've either met or exceeded these when they hopefully can pull another surprise maybe for Q2. And they also raised their full year 2024 guidance a tad bit too. Now, earnings call-wise, Palantir kept touting their U.S. deal growth of 94% from 70 to 136 for the comparison, which is impressive. But do note these are comprised of smaller deals since they actually showed much lower numbers on the 1, 5, and 10 million plus deal slide compared to the last quarter. So they are growing customers huge, but they seem to be smaller deals. And also the other big highlight from the call is that the analysts essentially are asking, what's the strategy going forward? And Karp says confidently that their products don't even have competition or competitors, considering they're able to sell with a lacking sales force. But he does confess, though, they are still figuring out the sales sides of things for these AIP boot camps. They're great at being teachers, educators, corralling people in, but getting to the point of selling effectively, of upselling or even cross-selling, he said say that they're still figuring out. But I'd say for me personally, I like these earnings still because they're still showing progress itself, albeit I'm curious to see if we can see exponential growth later on. But the continued turnaround in growth for revenue is much welcome than, say, a decrease or stagnation. And note, these thoughts on earnings is my perspective on the company itself and how it's operating, not necessarily the stock. I know everyone has their own view on what they're worth, and some are willing to pay a higher multiple for expected growth, while others are wait and see. So the stock reacting after earnings was a showcase of the opinion from the market overall that maybe they aren't growing as fast enough or the expectations of growth aren't fast enough. Just the $25 or something else might have been a bit much for them, but I'll leave it up to you to decide. But what were your thoughts this week? Let me know below, and I'll see you in the next video.